be a webinar in which I explore what I believe is the #1 reason traders lose money. Now, let me preface this by saying this is meant for day traders. So a lot of things I talk about is from a day trader's perspective in mind. I'm a day trader. I watch the market every single day. I make anywhere from 15 to 40 trades on a given week, depending what type of week it is. So this isn't necessarily going to apply to the swing trader or investor, so just keep that in mind. So what is the #1 reason traders lose money? This is an answer that deals with quality. I'm not here to talk about the cliches of losing money in trading. I didn't honor my stop loss. I put in more money than I should have. I didn't properly identify a good price to buy in at. I didn't have a plan before I entered the trade. All of those are cliches that deal with execution, or better yet, a lack thereof. This answer isn't about execution, though. That would be far too obvious. We're all going to mess up our execution sometimes. Anyone can tell you, hey, you're losing money because you messed up. But I'm here to help you understand why you lose money when you don't feel like you messed up. When you feel like your execution was solid, but something else was off, and you don't really know what it is. I can tell you what it is. You're trading the wrong stock at the wrong time. The #1 reason traders lose money is because of poor stock selection. The #1 reason traders lose money is because of poor stock selection. They fixate on trying to trade a stock that isn't moving. You have to trade a stock that is moving. That way you can find out if you are right or if you are wrong. You are only going to find out if you're right if the stock moves in the direction you need it to move in. However, even if you are wrong about the direction it was going to move in, you can correct this quite easily by simply getting on the other side of your original trade. What about if the stock isn't moving, though? If there's no direction? How can you know which side is right and which side is wrong if the stock isn't moving in one direction or the other? The answer is you can't. And that means you won't know if you should be buying it or selling it. So in other words, you should just stay away. The key then with making good trades starts with good stock selection. You must trade a stock that is moving in a directional manner or displaying volatility. This means that one of the skills you have to develop as a trader is an ability to identify a stock that is moving. Really, this isn't that hard. Notice, I didn't say you have to develop an ability to identify a stock that is going to move. That is a completely different animal, and that is very hard. Knowing when a stock is going to move is a skill developed by the trader who is already doing very well for themselves. Luckily, we don't need to be that good to be able to make money. So our focus again is simply on identifying a stock that is moving. The simplest characteristic to look for that shows a stock is moving is change in price. This is such a simple concept, but it's one that traders consistently overlook. Is the stock's price changing over time? So just to recap, this isn't about cliches. This isn't about execution. We all know that stuff. We know we lose money because we don't honor our stop loss. We know we lose money because we didn't have a plan going into it. All right? That's the easy stuff. That's obvious. Anybody could tell you that. But do you realize that a lot of the times you're losing money, it's because you're trying to trade something that's not there. There was never a signal, but you see a stock that's, oh, it's holding support, oh, it's respecting resistance. It doesn't matter what support and resistance are doing if the stock isn't moving. You could go long Google versus $590 all day long, but if all it's doing is staying between 590 and 592, then you're not going to make any money. You can trade Tesla all you want versus 215, but if all it's doing is going between 215 and 17, then you're not going to make any money. You can have proper theses and have trade ideas, but if the stock isn't moving where it can confirm those ideas, again, confirm that you're right, then it really doesn't matter. That's why traders lose money. So let's go over some examples and point out some of these characteristics that you want to look for when it comes to change in price and knowing a good stock to trade. I'm going to start out by showing you examples of stocks that aren't showing you change in price characteristics, stocks that you would need to avoid if this was the way they were trading on a given day. What you're looking at right now is a 3-minute chart of Amazon from June 25th. Here's the opening price over here. Okay, so we opened around 323.75, and you can see that 10 minutes into the day the price was still around 323.75. 20 minutes into the day the price was around 323.75. 30 minutes into the day the price was around 323.75. Simply put, Amazon wasn't moving. It wasn't moving. It wasn't changing relative to its opening price. It wasn't changing relative to where it was 5 minutes ago. It wasn't changing relative to where it was 30 minutes ago. There is no reason to trade Amazon on a day like that. But you know what? People look at this and they see this 325 level and they're saying in their heads, man, Amazon's doing a great job staying below 325, right? So if I can just get in here and as long as it stays below 325, I bet it's going to go down at some point. Why do you think it's going to go down at some point? It hasn't showed you any characteristics that says it's going to go down. Just because it's respecting 325, that doesn't mean anything if it's not making a hard move off of it. Now you're looking at Netflix from June 26th. Again, a 3-minute chart. All of these will be 3-minute charts. Here's our opening price again. Okay, the open on this day was 441, just about. All right, well, this is interesting. Let's see. So 10 minutes into the day, we get a little move here down to 439. Okay, that's a little something, but really it's just $1. All right, so maybe Netflix is moving. Maybe at this point I'm thinking, okay, maybe it's going to move. However, 10 minutes after that at 9:50, you're still right around 440. So you went from 441 to 440 first 10 minutes of the day, showing that maybe it's going to move. But then 10 minutes later, it's still around 440. So now it's just not moving. All right, now 10 minutes after that, you're right back up at 441 where you opened. So 20, 30 minutes into the day, Netflix really hasn't gone anywhere. You look at 10:30, the stock has found its way back down towards 440. But that doesn't really matter because we were at 440 60 minutes earlier. So it doesn't matter to me that it went from 442 down to 440 between 10 o'clock and 10:30 because it was already at 440 before 10 o'clock even started. All right, we need net change. We need the stock to be moving over time. Again, you could say, all right, Netflix is holding 440 as support, right? Here's your 440 line, pretty much just right across here. Maybe somebody's going long versus 440, all right? Or maybe they're going short versus 440. My question to that trader is, what's the point? Why are you doing that? It's not showing an explosive move to the upside, bouncing off of 440, and it's not showing an explosive move to the downside, getting rejected at 440. It's simply not moving and should be avoided. Here's an example on GMCR from July 11th. Okay, again, we've got our opening price here. The open on that day was right around 122. Okay, well, 10 minutes into the day, GMCR maybe shows some movement, similar to Netflix. 10 minutes later, it's down around 120, 150, okay? So maybe it's trying to move. However, 10 minutes after that, it's right back at 122. And then 10 minutes after that, it's still around 122. Then at 10:30, you've moved back down, but you're still around 120, 150. So yeah, you've come down 50, 75 cents, but in reality, you're just where you were 45 minutes ago. Okay? This price here is exactly the same as this price here. There is really no net change going on at all. So maybe somebody is going short GMCR versus 122 as their strategy. Again, resistance is being respected. You can see multiple times it gets rejected on 122. So that's something we look for when we're trading, execution-wise, right? We want to see resistance get respected. But again, does it matter? Is resistance getting respected in a way that's offering you trading opportunities? Are you really shorting GMCR at 122 and covering at 121.50, making the perfect trade every single time? I don't think so. Last example I want to show of a stock not changing in price over time. Check out Google. This is from July 9th. So Google on this day, here we are again, our opening price. Alright. So Google gets interesting because we open around 580, we open around 578. And 10, 15 minutes into the day, we're still right around 578. So there's nothing going on. However, then we get this move here. Okay? And when this move happens, we start to possibly get excited because it goes from 578, 579 up to 582. So maybe Google is showing us a sign that it is going to move. However, the problem is as soon as it makes that move, it then comes back down right away and finds itself back around this 580, 578 area, right? So it tried to show potential, but it could only do it for 3 minutes and then it came back down right away. So as soon as you see this move, what I'll mark as number 1, I'll say, okay, I'm on watch here. I'm on notice. Google might have just gotten a nice breakout here above this 580 area. Maybe there's going to be a long trade. So I need to see continuation. I need to see signs of it holding on to that change in price. If it's going to continue to change in price to the upside, which is what number 1 is hinting at, then it should be able to hold on to the change in price it was able to make. Well, here's the problem. You observe for a couple minutes, and what you see, what I'll mark as number 2, this second candle, is that it comes back down right away. So it couldn't hold the potential change in price. That is a red flag that tells you Google does not have good change in price characteristics on that day. And as it turns out, as you can see, eventually the stock just kind of found its way back down near its opening price. And while it does end up holding this 579, 580 area as support, I want to pose that question to you again. Are you really going long versus 580 just to catch these moves up here from 580 to 582? Are you making the perfect trade where you're buying it at the exact right time and selling it at the exact right time? To me, that is a stressful situation. That is a hard trade to be able to make. And if you're able to do that, more power to you. But I just think you're going to get chopped up and you're going to lose money. And it's not going to be because Google isn't holding 580 support. It's going to be because it's not experiencing price change volatility in a meaningful way relative to that 580 level. So those are the examples of bad price change, no net change in price. Some of the things we saw that was common. First 10 minutes of the day, the stock really had a hard time moving outside of its opening price area. 30 minutes into the day, the stock was often in a price area that it had been 30 minutes previously. 1 hour into the day, the stock was again in a price area that it had been 1 hour previously. Those are the characteristics associated with bad price movement. Price movement you want to stay away from. Price movement that's going to chop you up and lose you money. So let's look for examples of stocks showing positive change in price characteristics. Stocks we do want to trade. Stocks we do want to identify as good, as offering good trading opportunities. Okay, starting with Netflix. This is an example from July 8th. You can see our opening price here, right? Our opening price was $4.60, just about, was our opening price. Look what happens 5 minutes into the day. We're down near $5.59. So we have a $1 price drop from the opening price 5 minutes into the day. Then look what happens here 10 minutes into the day. Netflix has started to move below its opening price and extend out of its range from the first 5 minutes. It opened at $5.60. Now, 10 minutes into the day, the price is in the $4.57s. So we've gotten a $3 move. There's early signs of price change. As soon as I see that, Netflix is on watch. It's shown a good characteristic. It's shown the ability to move. I bet Netflix has a better chance of continuing to move than the examples I showed you previously. And sure enough, you can see here as the day progresses, you just had a steady move to the downside. Okay, we can just go through the times here. So at 9:45, the price was around $4.57. Well, you look at 10 o'clock and the price is at $4.55. Then you look 10 minutes later, the price is around $4.55. Then $4.50. Then you look around 10:30, 10:30, 10:35, the price is breaking $4.50, going into the 4.48s. Then you look 10:45, the price is around $4.45. All right. Now, granted, at that time, it kind of stopped moving a little bit, but it doesn't matter because this thing already moved from $4.60 to $4.45, guys. We already got a 15-point move. There was more than enough trading opportunities between 9:30 and 10:45 to take advantage of. And even so, even if you're late, you can still see that around 10:45 it's at 4.45. And then around 11:45 you're still getting net change. Now the stock has worked its way down to 4.42. All right. Now the other thing you'd want to say from a characteristic perspective is maybe you're late. Okay, maybe you miss this initial move right here. Okay, and this is where people get confused. They miss this initial move right here that went from 460 to 453 between 9:30, the open, and about 9:55, just ahead of 10 o'clock. And they get confused because the price is at 453 is at 950, right? And then you look 10 minutes later, 15 minutes later at 10:05, the price is still around 453s. And they say, well, Kevin told us that if it hasn't moved over 10 minutes, then there's no price change going on, so I should probably stay away. So Netflix was at 453 around 950, and it's still at 453, so I should stay away from that because that's not moving anymore, right? Wrong. Okay? It is showing you an ability to hold on to the price movement that it did make, right? Think back to the Google example that I talked about. Okay? Let's look at Google again. We had a chance at displaying price change ability. This was number 1 on the left, our green candle, but then this was number 2 on the right, this red candle here. All right? Google was not able to hold on to its price change. It came back down. Go back to this Netflix. Netflix made a price drop. It showed us price change. And now, from 9:50 to 10 o'clock, Netflix is holding on to the losses associated with that price change versus Google being unable to hold on to the gains associated with its price change. So we stay away from Google because it's not holding on to its move, but we look further at Netflix because it is holding on to its move. Even though it hasn't moved over the last 10 minutes, we're going to credit it for the movement that it showed us the first 25, 30 minutes of the day, because ultimately it then leads to further continuation. And you have that example numerous times. You can see again here, at 10:10 it makes another leg down towards 450. And you might say, okay, between 10:10 and 10:30, the price just stays around 450. Kevin says if it's not moving, I should stay away. No, that's not completely true. It is, again, holding on to the losses that it showed you to start the day. It's moved down to 450 and it's staying down near 450. So I'm going to bet on a continuation of this downtrend. And sure enough, you get a nice continuation move from 450 down to 445-ish. And the pattern really just repeated itself all day long. So it's important to distinguish price change before and price change after. Google showed price change before initially on that example we looked at, 580 to 582. But then after the fact, it didn't hold on to the price change. So we stay away. Netflix showed price change before 461 to 455, and then it showed price change commitment after, staying down at 455, something Google did not do. So that's why we committed further to Netflix, and that's why we expect Netflix to continue to move, and that's why it's a great candidate to offer multiple trading opportunities. When I look at this chart, I see 1, 2, 3, 4, really 5 moves, really probably even 6 because you start with the first one of the day. All right, there's 6 moves there that I see. And we're not talking about a 2-3 point channel like we were with Google, right? Google 580 to 582. Are you really trading that? Good luck. Netflix is trading 5 to 10 points at a time. All right? Which would you rather be trading? The stock moving in a $2 range or the stock moving in a $5 to $10 range? The answer is obvious, but people don't put themselves in the proper situation. Here's another example of Amazon. This is from July 11th. Good example of price change. So Amazon opens up here, and right away, Amazon makes a move. It opens at 335, 334s really, and within the first 3 minutes of the day, it goes up to 338s. All right, so right away you're on notice because Amazon has just moved 3 points within 3 minutes of the day. That is a great move. It's showing you price change relative to its opening price. And then, look what happens here, guys. We hold on to that move, right? So you're looking at this and you're thinking, man, this first candle of the day was a very nice move. If Amazon holds on to that move, there's a good chance at continuation. And sure enough, you look at what goes on between 9:45 and 10:15, you just make a sick rip from 337 up to 342. Again, Google's trading in a $2 range. GMCR is trading in a 50-cent range. Netflix, in that bad price change example I showed you, was trading in a $2 range. Amazon's ripping 6-7 points here in a matter of 30 minutes. And you just go down the line. You had net change at the open. You moved above its opening price and held it. Then at 9:45, the price was around 338. Well, at 10 o'clock now, the price is around 340. Then at 10:15, the price is around 341. Now again, it kind of slows down, right? So you say, well, Kevin told me that if it stops moving, then I should stay away. Well, it's not exactly true because that means you're discrediting that initial move it made. Amazon made this big move from 335s all the way up to 342s. And come 12 o'clock, Amazon was still holding the bulk of that move going into the afternoon, telling you that there was a chance at further continuation because of the way it was able to hold its upside move. And sure enough, between 12 and 2 o'clock, you got further continuation higher, with the stock going from 12:30 at 342 to 1 o'clock at 345, and then 2 o'clock it was up into 346s. Another example of a stock you want to be trading. Here's an example of Tesla from July 15th. Again, here's our opening price. We opened around 226, right? Now, you open around 226. Within the first 3 minutes of the day, the stock is down near 225. So right away, it shows us, hey, I've got some ability to move down here, right? And then 5 minutes into the day, you're printing 224s. So now we're definitely on notice, and we're saying, okay, if it can hold on to this down move, it just displayed some ability to move lower. So if it holds on to this move lower, there's a good chance that it sets up to go lower overall. Well, look at what you have happen. You came down to 225, and then this is where resistance starts to matter, because we showed a good move initially below 225, so 225 becomes that round level reference point that we're watching, that we're looking to trade against, and we say, hey, as long as Tesla is staying below 225 on a net basis, it is showing commitment to this move that number 1 and number 2 showed you off the bat early in the day. And that is exactly what you have happen here right around 9:45. The stock gets back up to 225-ish, but it stalls out perfectly. Okay, so at 9:45 it's at 225, holding on to a $2 loss from its opening price. Then at 10 o'clock, the stock has made its way down to 223s. So again, we say, okay, now it starts to just kind of go sideways, not showing any net change in price. That's true, but it is holding on to the losses associated with this first move here. So when you have this sideways price action, you're saying to yourself, hey, as long as it is holding on to the losses, it is showing commitment to the downside. And then sure enough, you can see further continuation, the stock going from 223 down to 219. So again, we started up at 227s, right? And we have made a 8-point move down to 219s. That is volatility. That's what you want to trade. Lastly, looking at Priceline from July 1st. Another clean-cut example here. Priceline opens up. The stock's opening price was $12.17. Within the first 3 minutes of the day, the stock is printing $12.21. So right away, I see a $4 move on Priceline. So it becomes a matter of, hey, if it can hold this initial move, I bet there's a good chance Priceline continues to trend higher. And sure enough, you can see that you do hold that move, right? And you go sideways a little bit. First 20 minutes of the day, but the key is that you're holding above this opening price. You're holding above the opening price. You're holding on to extension. At 9:30, you open at 12.17. 9:35, you're printing 12.20s. 9:50, you're still around the 12.20s. You're around 12.25. 10 o'clock, you're at 12.28. 10:10, you're at 12.30. Okay, so you've gone from 12.17 to 12.30. Granted, again, we slow down. We stall out a little bit, right? We've got this nice long consolidation from 10 o'clock down here to about 11:10 or so. However, it's a consolidation that's holding on to the move higher. It committed to the price change that it showed you, and sure enough, it gives you move number 1, and then shortly after 11 o'clock, it gives you move number 2, and just drifts higher from there at a nice pace. So all of the examples of good price change, the stocks we do want to trade, had a couple things in common. They all moved meaningfully in relation to their opening price. Then they all moved meaningfully in relation to where they were from 9:45 to 10 o'clock, or from 10 o'clock to 10:30, or from 10:30 to 11 o'clock. The price never got stuck within its opening price or within its first move of the day. The only time the price got stuck at a certain area was after we had seen evidence of change in price. So, as I illustrated in the examples, there are lots of ways to evaluate change in price, but here are some simple questions to remember, and I would recommend writing these down somewhere so that you can reference them when you're in a trade. 4 questions that you have to be asking. Has the stock price changed relative to its opening price after the first 10 to 15 minutes of the day? Has the stock price changed relative to its opening price after the first 10 to 15 minutes of the day? Next question. Has the stock price changed relative to its previous day's close after the first 30 minutes of the day? In other words, has it shown signs of a percentage increase or decrease, or is it just hanging out close to the flat line? Has the stock shown signs of a percentage increase or decrease, or is it just hanging out close to the flat line? Next question. Has the stock price moved out of its initial 15 to 30 minute range during the 10 o'clock hour? Okay, you look at this price line example. Here's our initial 15-30 minute range between 12:20, 12:15-ish and 12:25-ish. Well, during the 10 o'clock hour, we do indeed get a move up to the 12:30s. And final question for me. Has the stock price moved during the 11 o'clock hour from where it was during the 10 o'clock hour? Again, you look at price line. Between 10 and 11 o'clock, it's pretty much between 12:30 and 12:35. Well, you look during the 11 o'clock hour, it makes a move from 12:35 to 12:40. So it is changing. So if you are answering yes to these questions when watching a specific stock, then there's a good chance that that stock is indeed moving and providing good trading opportunities. If you are answering no to these questions when watching a specific stock, then there's a good chance that stock is not moving and should be avoided. So in my eyes, that is the number one reason traders lose money. They are trading the wrong stock at the wrong time. They don't know how to identify movement properly. They're focused too much on support and resistance, not taking into account the fact that the stock simply isn't moving. So, with that said, I'll open it up for any questions on the topic. Does everybody understand, what I'm talking about? This ability, developing your skill to identify movement. You don't need to predict movement, guys, right? Everybody wants to know when the move is coming. That's hard. Who cares? We don't need to do that to be successful. We just need to react to the movement once we see it. Alright, questions going once, going twice, 3 times. Didn't get any, so that's good. That must mean you guys understand what I'm saying here. So if you could help me out. Okay, Simon's got one for me. I'll wait. But I was just going to say, when you guys leave, there's going to be a survey that pops up on your computer screen. It's only 6 questions, multiple choice. It won't take you more than 2 minutes. If you could just fill that out, that would be very helpful for me. I'd really appreciate it. Kind of in exchange for me doing this webinar, that's what I would ask of you. If you fill out that survey to me, that'd be great. So Simon, your concern is on the pullback. What's your concern on that pullback? I think I know where you're going with this, but I'll wait to hear your question here. Okay, where it looks as if it's not going to hold its gains. So are you talking about which type of play are you talking about? Are you talking about the winning trades or the losing trades? You know, the ones we do want to be playing? For instance, are you talking about something like price line right here and right here? Is that what you're talking about? Okay, so this is where support and resistance becomes important. We talked about support and resistance not mattering if the stock's not moving. Well, if the stock is moving, it matters a whole lot. And what I would point out to you is, number one, at the outset of the day, first 5 minutes of the day, first 5-6 minutes of the day, price line goes from 12.17 to 12.28. That's a 11-point move within the first 5 minutes. If you caught that move, you're probably locking in profits, I would think. And if you didn't catch that move, I certainly hope you're not chasing an 11-point move right away. All right? That's where you say, okay, it showed me price change movement here. So now what I need to do is I need to evaluate a spot at which I want to get in. One such spot to me, just keep it simple, is round levels. Any number that ends in a 0 or a 5. So 1220, 1230, 1225, 1235. All right, those are all just simple round levels that I would be referencing on the support side that I would look to get in. As far as getting out at a profit, I mean, that's on you. I mean, if you catch this move and price line goes from 12.17 up to 12.30s, options have moved 100% off of that move. And if you're not getting out at a profit on that, then again, that's the execution side of things. This isn't a webinar about execution, all right? We all know sometimes we mess up our execution. This is a webinar about making life easier on yourself. If you catch a 20-point move and don't lock in profits and then get shaken out on this type of pullback here, then you should consider signing up for my premium service because we've got other things we need to work on. What I would say though in this situation is you get this move here up to 1230s, right? And at this point there's been a 20-point move. So you have to use some logic and say, okay, there's a 20-point move. If you have participated, you have to say, should I maybe consider locking in some profits after a 20-point move? The answer is yes. If I haven't participated, you have to say, is it smart to buy in right here after a 20-point move when I haven't played? Or should I wait for a potential pullback and kind of observe some support? I personally would try and get in on a pullback if I miss this move. And the two levels I would be referencing is 1235 and 1230. And you can see that it did do a perfect bounce off of 1230 right at 1030. So that would have been a good pullback entry. But again, as far as locking in profits, ideally you're not in when it goes down like this. You're not in when it goes down like this. You're getting in when it goes down like that, because you've caught the move already, because you identified the change in price characteristic and you're locking in profits before it has a chance to pull back on you. Let's just look at one other example we can apply this to from the winning trade side of things. Amazon never really pulled back that day. Alright, so let's take this Netflix example, and this is on the short side instead. So again, you identify the net change right away first 5 minutes of the day based on what we've gone over. So you know there's a short signal here. So you catch this move ideally, right? And then there's a little bit of a bounce right here. Well, if you caught a move from 460 down to 455s in 10 minutes, puts made a great move, probably 40 to 60% depending on the day, I would imagine you're locking in profits, and again, that's on you. So this little bounce here shouldn't necessarily be scaring you. That should maybe be viewed as another short opportunity. And then same thing here, you continue lower from 458 down to 453s. If you catch a move from 458s to 453s and you haven't locked in profits, that's a whole nother story, because this bounce here that it makes, again, we're not going to be in when that bounce occurs. We're going to look to get in when that bounce occurs, because then you have another leg lower, and then again, same thing, another bounce here from about 450 up to 452. We're not worried. We're not in when that bounce occurs. We're looking to get in when that bounce occurs. No problem. The key here, guys, I mean, we can talk about this stuff all we want, but at the end of the day, it's about attacking what we see. Okay? We can know what we see, but we still have to bring ourselves to be able to attack it, right? So, just work on attacking. If you find yourself struggling to attack when you see, something like this on Netflix and you're thinking, man, this is exactly what he's talking about. It's about to move. I know it is. And you find yourself struggling to enter for whatever reason, whatever size you were going to put in, cut your size in half. Lowering your size will always make it easier to enter a position with confidence. So, Jamie, I don't really see a question. If you could turn this statement into a question, I could maybe give you some better insight. You're getting burned on any specific stock making lower lows. You feel like you're holding too long. Well, if your winning percentage is 70, let me ask you this. You've got a winning percentage of 70%. That's phenomenal. I wish my winning percentage was 70%. But what is your average winner versus your average loser is what I would ask you. Because it doesn't matter what your winning percentage is if your average losing position is greater than your average winning position. I've had weeks where I have a 40% winning percentage, but my average winning trade is greater than my average losing trade, so I end up in the green on the week. I've also had weeks where my average winning percentage is 70%, but my average losing trade is greater than my average winning trade, so I end up down on the week. All right. Well, I feel like, Jamie, you're being too prideful maybe when it comes to your losses, and you're letting that $500 loss turn into $1,000, turn into $2,000, even though at $500 you know deep down that you should probably be getting out. I mean, there's really not much more to say other than, I feel personally like we always know when we're in a losing trade. We know when we're at that 10% loss that this isn't going to work. But some of us decide to see what happens. Those famous words. I'll just go overnight, see what happens. Maybe it'll change. I'll just hold another 30 minutes, see if it'll change. I'll see what happens. And all that happens is something negative. And the worst part about that strategy is if something good does happen, just by happenstance, then you're going to trick yourself into thinking that that's the way to actually trade when it's not. So, cut your pride out. Learn to empower yourself. I have a specific video on YouTube that I'll pull up here that kind of deals with that, how to avoid a losing trade. So I'll link that to you. If you guys haven't visited my Watch and Trade YouTube channel, I'd recommend it. There's a lot of stuff on there, similar to this. So 2 videos I would recommend for you, Jamie, is how do you deal with frustration in trading? Okay. And then how do you manage / avoid a losing trade? I would watch both of those. So Ed talking about the fake outs. Guys, fake outs don't occur as often as you think. The reason we have fake outs or we observe fake outs is because we don't make a good trade in the first place and we're looking for someone to blame. You look at these good examples I showed you. There wasn't one fake out there. Sometimes, yeah, maybe you're going to be super aggressive and maybe as soon as you see this move on Google, you get in, okay? Because that's the style of trader you are. And then, yeah, I guess that would classify as a fake out. But if you're going to be that aggressive, you have to accept the consequences of that strategy when it doesn't work. But if you look at the winning examples I showed you, there weren't any real fake outs. It was very clean movement. And the thing I want to stress along those lines is, I'll just read the dates off here. So the winning trades, July 1st, July 11th, July 8th, July 15th. Those are 4 days out of the last 2 weeks of July that, I found really good examples. 4 days out of 10 trading days, 40%. Stocks are gonna not move more than they are going to move. There's going to be more days where you should stay away than there's going to be days when you should participate. So that's another thing to remember with those fake outs, is that majority of the time it's not a good day to trade. I'm actually taking the day off tomorrow because Google has earnings after hours on Thursday tomorrow, and I feel like Friday, Google is going to be volatile. So I'm just going to rest, and I'm not even going to trade because even if maybe there are some moves tomorrow, I feel confident that Friday is my best bet for change in price volatility. And just remember that along these same lines. So Simon asks, is it appropriate to ask about the correlation of volume here as a confirmation signal, or is that another seminar? Yeah, it's definitely appropriate to ask about volume. Again, I kind of wanted to avoid the execution side of things, but volume definitely plays into it. Volume, support, those are all things you're going to want to see confirmed. What I would say, though, is you look at Amazon and this move, you look at Priceline, you look at the way Tesla moved, you look at the examples of the winning trades. Let's just go look at the daily charts on those dates, guys. And I can tell you before I even look at them, the winning days had higher volume, and the days you wanted to stay away had lower volume. All right, so let's check that out. That would be my guess. So this is the Amazon. Let's compare Amazon June 25th. It had awful price movement. Let's see what our volume was. Our daily volume was 2.3 million shares. Well, Amazon on July 11th had excellent change in price. Our daily volume was 8 million shares, 400% greater. So, yes, volume is going to confirm, but volume's important. Everything's important. Support's important. Resistance is important. The execution criteria is all important. My point is, if you see movement, if you're able to get movement like on July 11th from Amazon, the volume's already there. You don't really have to worry about it as much. You're not going to see a move like that without volume. It's kind of like what comes first, the chicken or the egg. Does the price move first or does the volume come in first? They work together. So yes, you want to look at it for confirmation purposes, but the first thing I look for is change in price. Yeah, Jamie, level 2, I mean, that's all I'm using these days, really. I'm showing you guys chart examples because that's where it's easy to show these things. But as far as my own personal trading, when I'm actually analyzing these things in real time, I'm solely looking at level 2 for the most part. I'll show you my main trading window when I'm making a specific trade. So this is my platform setup. This is the window that's on my other screen. And you can see, I've got Tesla level 2 down here and time and sales next to each other. That's kind of where I'm staring. And then I have the level 2 of the option that I'm trading. I've got puts on the left side, calls on the right side, time and sales of the options. And yes, I do have a chart to kind of, confirm what I feel like I'm seeing on level 2. But my eyes are fixated on level 2 more than they're fixated on the chart. Guys, I would really, recommend, if you're struggling with some execution stuff or you want to get better at your stock selection, spend $5 for a trial and you'll get 5 days where I go over all this stuff. I promise you it'll be the best $5 you've spent. And then, if you're interested, you can be a monthly member if you want. But, I'm not telling you to do that. I'm just saying sign up for the week. $5, it's, it's a bus fare these days. I promise you'll get a lot out of it. I'd be confident saying that you would learn more with me in 5 days at $5 than you'll learn spending, hundreds of dollars anywhere else. I really believe that. Any other questions, guys? Uh, better to do the 5 days just watching or watching and trading? I don't tell anybody what to do. Um, if you're a beginning trader, I trade weekly options on the stocks I showed you. The examples that I showed you are the stocks that I follow. You can see here on my screen. I've got Tesla, Netflix, Amazon, Google, Priceline, Green Mountain, GoPro, Apple. I don't trade anything but these stocks. If these are the stocks that you're trading also, and if you're also trading weekly options, then yeah, I would say sign up and watch, but also trade if like the movement in the stocks I'm trading. But if you don't trade these stocks, if you don't trade weekly options, then I would recommend just watching, because what you're going to get most is just the insight into my trades, the insight into, okay, he took a 30% gain, and then he explained why he did that, or he took a 10% loss, he explained why he did that. He's explaining what he's seeing on level 2. Because everything I talk about in my own trading, you can go and apply it to all of your own specific stocks or whatever strategies you're using. I showed you these as examples on Priceline, Google, Green Mountain, Tesla, and whatnot. You can take the characteristics and apply it to any stock, and I guarantee you it's the same thing. So, I would say it just kind of depends on what you're already trading and how you're already trading. If you're kind of already similar to me, then yeah, you would get a lot out of probably following along some of the trades too. Anything else, guys? Jamie, shoot us an email about that. We'll go over that. Just because this is being recorded, so I don't want to, that's kind of a unique question for the service. So no worries. But yeah, just shoot us an email and we'll go over that and get you all set up. All right, guys. Thank you very much for attending, and like I said, if you could just fill out the survey that's going to pop up after I close this out, I would really appreciate it. And I will keep you posted on future webinars similar to this, and hope to see some of you in Watch Him Trade. Take care. Have a good rest of your night.